The REG exam has more rules to memorize than any other CPA exam, and most students run out of time before they get comfortable with all of the rules. I scored a 91 on REG in 8 weeks while working a full-time job. And in this video, I want to walk you through my study approach, the topics I focused on, and the one topic that always shows up on the REG exam. I studied for REG over about 7 to 8 weeks. Most sources recommend around 110 hours. I put in 140. Here's why. REG isn't like FAR where you can grind journal entries until they click. REG tests how multiple rules interact inside the same problem. The only way to get good at it is repetition. My weekly breakdown looked like this. Monday through Friday, 2.5 hours each night, strictly new content. Watch the lectures, take notes, build your outline. Saturday and Sunday, 5 hours each day. Nothing but practice. MCQs and sims. That's it. Here's the mistake that I see students make constantly. They spend weeknights re-reviewing old material because it feels productive. But then before they realize it, they're 2 weeks behind on their plan. So weeknights are for moving forward and weekends are for locking in the content. One more thing on study strategy. REG has a ton of numbers, contribution limits, deduction thresholds, phase-out ranges. A lot of those are inflation adjusted. They change every year. The exam will give you the number in the problem. So stop trying to memorize every temporary figure. Focus on understanding how the rules work. The AICPA blueprint breaks REG into 5 content areas. Here's the weighting. Ethics and federal tax procedures 10 to 20%. Business law 15 to 25%. Property transactions 5 to 15%. Individual taxation 22 to 32%. And entity taxation 23 to 33%. Your 2 biggest areas are individual and entity tax. Combined, they make up over 60% of your exam. That's where the bulk of your study time needs to go. Here's what most students miss. The AICPA tells you exactly how they test each area. Ethics and business law are mostly recall. They want to know if you memorize the rule. But individual tax, entity tax, and property transactions are application and analysis. That means sims. That means calculations. You can't just read a textbook and hope it sticks. You have to practice working through problems. So let's break down the tax areas. Individual taxation is the single biggest area on REG, up to 32% of the exam. And it all flows through one document, the Form 1040. If you understand how the 1040 works top to bottom, you can handle anything they throw at you. It starts with gross income, then you subtract adjustments to get to your AGI, then you subtract your deductions, standard or itemized, plus the QBI deduction if it applies. That gives you taxable income. Then you calculate the tax and subtract your credits, and that's the whole return. Every single question on individual tax maps to one of those steps. I want to help you pass the REG exam, and that's why I created my free REG 101 course, which includes the full REG outline that I use to pass my exams, 10 highly relevant MCQs with video explanations, and a full guide on basis. You need to know what counts as gross income. Wages, interest, dividends, capital gains, including gains from virtual currency. The blueprint specifically tests crypto now. You also need to know your exclusions, things like tax-exempt bond interest and life insurance proceeds. The exam loves to throw an exclusion into a gross income calculation to see if you can subtract it. Below gross income are your adjustments to AGI. Retirement plan contributions, HSA contributions, self-employment expenses. These reduce your AGI before you ever get to the standard deduction. And AGI matters because it's the gatekeeper. A ton of credits and deductions either phase out or depend on your AGI number. It controls everything downstream on the return. Then you choose standard or itemized deductions. For itemized, the exam tests medical expenses, state and local taxes, mortgage interest, and casualty losses. So you need to know the rules and limitations for each one. Now here's where students get tripped up with loss limitations. The blueprint tests 3 types. First, capital loss netting. You net your short-term and long-term gains and losses,
And if you end up with a net loss, you can only deduct $3,000 per year. The rest carries forward. Second, ordinary business losses are limited by your basis in the entity. We'll talk about basis in detail in a minute. And third, know your disallowed losses. Hobby losses are not deductible. Wash sale losses get deferred. Personal use asset losses are gone. And the exam will mix these into a sim and see if you can sort them out. Now, entity taxation is the heart of the exam, up to 33%. You need to know the difference between a C Corp, which pays tax at the entity level, and pass-through entities, S Corps and partnerships, where the income flows through to the owner's individual return. For C Corps, the blueprint specifically tests book-to-tax differences. That's the Schedule M1 and M3 reconciliation. You need to identify permanent versus temporary differences between what's on the books and what ends up on the tax return. For S Corps, you need to know the eligibility rules cold. One class of stock, 100 shareholder limit, must be a domestic corporation, only eligible shareholders, no partnerships, no non-resident aliens, and know what causes the election to terminate. The exam loves to give you a scenario where someone accidentally blows the S election and asks what happens next. Now, the single most important concept inside entity taxation is basis. Write this formula down. Screenshot it, whatever you have to do. Basis equals your initial contribution plus your share of income minus distributions minus your share of losses. Think of basis as the amount of investment you've put into the entity that you haven't already gotten back tax-free. That's why it matters so much when the exam asks whether a distribution is taxable or whether a loss is deductible. If you don't have enough basis, you can't take the deduction.
As your coach, here's what I want you to hear. Basis questions can look intimidating because they throw 5 different pieces of information at you in one question. But the way to solve this is to slow down and break it into one layer at a time. First, increases to basis with contributions and income. Then decreases in the specific order of distributions first, then losses. The REG exam rewards students who stay calm under pressure.
Here's a trap that the examiners set all the time. In a partnership, your basis generally includes your share of the entity's debt. In an S Corp, it does not, unless you personally loan money to the corporation. That one distinction shows up constantly. Property transactions is a smaller area, 5 to 15%, but it's pure application and analysis. No memorization questions. Every single question in this area requires you to calculate something, and it starts with knowing the basis of the asset before you ever get to the sale. Now, the blueprint tests 5 different ways you can get an asset, and each one gives you a different starting basis. Purchased assets, cost basis. Gifted property, you generally take the donor's basis, but there are special rules if the fair market value is lower at the time of the gift. Inherited property, stepped up basis to fair market value at the date of death. Property converted from personal to business use, you take the lower of your cost or fair market value at the conversion date. And wash sales. The disallowed loss gets added to the basis of the replacement stock. These 5 basis rules are your foundation for every property question. Once you have the basis, the exam tests cost recovery, depreciation, and amortization. Be comfortable calculating maker's depreciation, know which assets qualify for bonus depreciation versus Section 179, and know that the blueprint says they'll ask you to review depreciation schedules for accuracy. That's an analysis level question. They're not just asking you to define straight line, they're asking you to spot errors in a schedule and fix them. Ethics and business law together can make up 35 to 45% of the exam. That's not a footnote, that's nearly half your score. And the good news is that these areas are mostly remembering and understanding. Straight recall. If you've seen the rule once, you can answer the question. So let's make sure you've seen them. For ethics, Circular 230 is the backbone. Know the rules for practicing before the IRS. Know who qualifies as a tax return preparer and what situations trigger preparer penalties. And don't confuse preparer penalties with taxpayer penalties. The blueprint tests both separately. Late filing, accuracy-related penalties, fraud, know the distinctions. For business law, the blueprint tests 4 major areas. First is agency. Understand actual authority versus apparent authority and the duties between agents and principals. Second is contracts. Know what makes a valid contract, when it has to be in writing under the statute of frauds, and the remedies available for breach. Third is debtor-creditor relationships. Attachment versus perfection, secured versus unsecured creditors, and bankruptcy priority hierarchy. And the fourth area is federal regulations. The blueprint specifically tests worker classification, employee versus independent contractor. It also tests employment taxes from both the employer and the employee side. And there's the Foreign Corrupt Practices Act. That's the anti-bribery law. It shows up as a quick MCQ, and it's free points if you know the name and what it prohibits. Now, I know that was a lot of ground to cover, which is exactly why I built a free Reg 101 course. Inside, you'll get my 91 score reg framework, a partnership mastery deep dive, and practice questions covering everything we just talked about. It's linked below, so go grab that.
All right, so now you have the same study approach and topics that got me to a 91 on reg. But just hearing the topics is not enough. You need to practice them and apply them. So jump to the next video where we go through 10 reg MCQs and fully solve them together.